Anyway, focusing in on the commodity sector, sugar has had an impressive run up, 60% gains this year. On the other side of the coin, though, is corn, one of the worst performing commodities this year. Michael Whitney's here from the markets desk. Michael, you've traded this stuff. Is it all about the weather even more so right now?
Well, it's a couple of things right now. It's really about what I call high prices equaling really good fertilizer. And corn pollinates in two different stories, to use a weird phrase there. It's about corn syrup demand, which has been going down, and rising sugar demand in the U.S. And it's also about the demand for ethanol. Take a look at the chart here, and the chart really tells you the story here. You can look last year, we had this meteoric rise in the price of corn, traded to all-time contract highs, $7 a bushel. Well, what happened here? They phased out what was called MTBE as an oxygenate additive for gasoline. All of a sudden, you had to fill that oxygenate with ethanol. We saw soaring demand for ethanol, and they built up massive amounts of capacity in this industry. And what that meant was they had to buy a whole lot of corn.
Because farmers were given incentives to grow corn because of the support, political support for the ethanol as an alternative to crude oil, right?
Well, that's certainly part of it,
Margaret. It's sort of a Washington story.
It's a Washington story a little bit, but it's also just a story of Economics 101. High prices beget better husbandry, they beget better farming practices, and they encourage farmers just to shift acreage around. Instead of planting soybeans, which earns you a little bit less money, farmer looks out and they look at the futures board and they say, hey, I want to plant corn instead because I'm going to get $6, $7 a bushel. So acreage expands, and that just sows the seeds for the bear market, which has come right on the heels of those huge prices last year.
So many people on the street read Dennis Gartman's newsletter every morning. I know I do. He's a big fan of owning the edible commodities right now. What are your thoughts on sort of his assessment? Would you trade alongside him there?
Well, I think there's a little bit of a mixed story, and not in the way of giving a trading recommendation. The bulls really think that it's a little bit too cheap here. They think there's not a lot of downside. Hey, how far down can it go? They see it's only upside, and they see right now that ethanol demand is starting to restart up. The low natural gas prices, which are used to fuel the compressors that crush the corn and make ethanol, that price is down and makes economics look a little bit better for the ethanol producers. That's bullish for corn prices. On the bear side, they just look at the crop. They say the weather conditions have been absolutely ideal, 71% good to excellent conditions the last 3 weeks from the USDA crop reports. They just say there's too much corn around, and they can't get too friendly to it until we see a little bit more of the current crop move through the system.
All right. Thank you so much, Michael. I appreciate your latest commodity